The tariffs just broke the economy, and it's about to get worse.
Bruh.
Sensational intro to keep you hooked and watching the entire time. All right, so I got a quick question for you. When you hear about tariffs, do you immediately think that it's just a tax on the other guy, the other foreign country? Yeah, not exactly. In reality, tariffs are like tossing a hand grenade into the middle of your own economy. And Apollo Global Management just dropped a bombshell report showing exactly how bad things are getting behind the scenes. So today we're going to break down the real data. There's no political spin here. There's no propaganda. And we're going to talk about how businesses and everyday consumers like you and me are feeling the heat. Let's get into it. Okay, so let's take a look at the economic domino effect. So Apollo is calling this the Voluntary Trade Reset Recession. So why voluntary? Because this isn't caused by a natural business cycle. It's caused by tariffs being slapped on goods intentionally. So here's the chain reaction. Tariffs hit, container ships slow down, trucking demand collapses, companies lay people off, shelves go empty, boom, we're now in a consumer recession. So these are not just theories. CEOs are openly saying it, which I'm going to show you in the new slide. But let me get a quick sentiment check down in the comments below. Every time I go to Longhorn Steakhouse, not sponsored, please sponsor me, Longhorn, it's packed. Every time I go to the golf course, I don't want to name the local course. Please sponsor me, give me free golf. Packed. Golf course is packed. Driving range is packed. Steakhouse is packed. Bars packed. Movie theaters packed. Well, maybe not movie theaters. I just made that up. But are you guys really seeing a slowdown in economic activity? Keep that in mind when you're going through this video. So back to my original point. Some CEOs are openly saying it. Southwest CEO said, I don't care if you call it a recession or not. In this industry, it's a recession. Chipotle CFO said customers are skipping burritos to save cash. Pepsi said consumer strength is weakening. When people start hesitating on guac and soda, the lifeblood of this beautiful country, you know the economy isn't doing too well. Okay, but how are businesses responding to tariffs? So on the business side, companies are cutting spending fast. They're canceling projects and stocking up before tariffs kick in. Earnings forecasts are falling off a cliff, the sharpest drop since the pandemic. New orders are collapsing too, and when businesses stop ordering, it's because they expect demand to dry up. CapEx spending, which I'm going to show you a slide of very quickly, meaning money invested in growth, is also getting slashed. No one wants to spend money when they see a storm coming. So let's get into this. So we can see here, this is the sharpest decline in earnings outlook since 2020. This is pretty serious. Some of these slides feel like they're just created to push a narrative, but I'll give you my thoughts on that at the end here too. But all this data is for real, and all the sources are in the bottom left side of the screen. So if you take a look at new orders right here, you can see them all color-coded, and again, the sources in the bottom left. Red is ISM New Orders Index. That's basically the baseline, and then you have each individual sentiments here. You have New York, Philly, Dallas, Richmond, and Kansas. The sharpest one that I'm seeing is Philly. That's the yellow line. But if you look at this, you guys, we're pretty much back to where we were in the beginning of 2022. Yes, there was COVID in 2020. That's the gray line right here, the gray bar. Those typically indicate recessions. We hit new all-time highs in the stock market. That's pretty much why this is up. And then we declined and, again, started to tick back up, and now we're down again. So is this as bad as it looks? I don't know. But if we look at the CapEx spending plans, this one is for real. You can see we're lower than the baseline here, especially when it comes to the Kansas Fed. That one is actually below. It's negative 10%. But at the end of the day, we're pretty much back to where we were in the beginning of 2022 anyway. So again, take all this with a grain of salt. Something that is true, which I'm sure a lot of you are seeing, are the cost pressures increasing. So these are manufacturing inputs. Okay, this is the survey prices paid versus PCE. So PCE is basically your baseline here. That's the dark green line. And you can see all these are starting to tick back up on the right-hand side of the screen. On top of all this that I just showed you, truck sales have tanked. So this is not truck sales of like a Ford F-150. Okay, these are heavy truck sales. So if you take a look at United States heavy truck sales, these are down significantly in March. But again, if you look at the dip compared to COVID, I mean, that's pretty much nothing. If you look at 07, 08, 09, take a look at that. So again, guys, let's take everything with a grain of salt here. If we look at Logistics Managers Index, this is also declining. Again, logistics is the heartbeat of the country. These are all sounding an alarm. They all are starting to tick down. The main question is this going to be prolonged? So when every part of the economic machine is kind of flashing red, you do have to pay attention. So let's take a look at our buddies across the pond over in China, actually across the other side of the world. So here's something most people don't realize. Shipments from China to the US are not just slowing down, they're grinding to a halt, okay? So if you look at container freight rates, they're falling off a cliff. But again, I want to provide some perspective. So this is container ship count, departures from China to the United States. Obviously, they're down. But again, we're pretty much where we were, just earlier in the year, you guys. Maybe a little bit lower, okay? Maybe summer of 2024, maybe October of 2024. So again, let's not be too alarmist. If you look at the tonnage, this definitely has declined pretty sharply. So this is total capacity and total used capacity is the green line. And then if you look at the container freight rates, this only goes back to the beginning of 2019, you guys. So remember when COVID happened, all these container rate prices spiked up like crazy, and then they went down. They spiked up, and then now we're pretty much back to the end of 2020 right there. So again, take everything with a grain of salt. Okay, so pay attention because this next part is the most important part of the video. This is what's happening to consumers. We're not talking about heavy machinery. We're not talking about heavy truck sales, freight rates going down. We're talking about consumer sentiment and what the everyday Joe is feeling. But before that, let's get into today's sponsor, Uphold. Let me ask you something. Where do you park your cash in crypto right now? Is it earning anything? Or is it just sitting there doing nothing? Because if your answer is it's just sitting there, it might be time to check out Uphold, today's video sponsor. This is a platform that I think a lot of you will get value from, especially if you're into crypto, staking, or earning yield on your USD. Now, as I always say, your money should be working for you to preserve your purchasing power and at least be keeping up with inflation. And that's exactly what Uphold is designed to do. For starters, if you're new to crypto or want an easy on-ramp, Uphold is very beginner-friendly. It's clean, intuitive, and easy to navigate. But here's where it gets interesting. If you are someone who actively trades crypto pairs, this platform is a powerhouse. Unlike most exchanges that only let you trade certain pairs, Uphold lets you trade between any two supported assets. And since they support hundreds of cryptocurrencies, that gives you access to literally tens of thousands of trading pairs. That's huge if you want to move quickly in between tokens without constantly going back to cash. But maybe you're not trading every day. Maybe you're holding and earning. In that case, the staking options on Uphold are some of the best that I've seen. They offer staking on more than a dozen coins, and I'm talking rewards well over 10% on certain assets. That's real passive income potential while your crypto sits tight. It's actually doing something for you. And if you're more conservative and just looking to maximize your USD balance, Uphold offers a USD interest account only available in the US where you can earn up to 4.5% on your cash. That's 4.5% on dollars. See this little piggy bank with the 4.5% right there? I know it's kind of hard to see, sorry. That's 4.5% on dollars just by moving your funds into that account. Even balances under $1,000 still earn 2% APY, which blows traditional savings accounts out of the water. So whether you're trading, staking, or just looking for a smarter way to hold your cash, Uphold gives you options. Click the link in the description to check it out and get started. Thanks again to Uphold for sponsoring today's video. Consumers are feeling the squeeze too. Consumer sentiment across all income groups is crashing, and the fear of job loss is spiking. Alarmist. Dun, dun, dun. Just kidding. So again, take all this with a grain of salt. So when people are scared about losing their jobs, they stop spending, period. Expectations for future business conditions are also falling off a cliff. Most Americans think they're going to get worse. But again, US dollar dominance, baby. That's why I keep dollar cost averaging into the market. Federal Reserve, print the money, baby. M2 money supply, print the money, baby. It's a game of musical chairs. So just keep playing until it stops. And when it stops, you're not going to care about the value of your portfolio. Trust me.
Wrong.
No, right, for sure. So let's go through a couple of these. So this is consumer sentiment declining across income groups, okay? So if you look at the green line, this is consumer sentiment for families with income greater than $100,000 a year. The blue line, families with income less than $100,000 a year. So you can see the people in the green, the people that are actually making some money, they obviously started higher and they're declining. If you look at the people that started a little bit lower that are making out less than 100 grand a year, they don't care. They already got their cigarettes, they got the Newports, they're just chilling. They don't care. But they're also ending up almost in the same spot, which is telling. That's showing you that even middle class, upper middle class, well, you can't really consider 100 grand a year upper middle class, but you know what I mean. It's saying people that make six figures or more per year in a household, their sentiment is falling as well. So if you look at consumers very worried about their jobs, look at this spike. This is crazy. This one's actually pretty serious. And then also, if you look at the record high share of consumers that think business conditions are worsening, look at this. This is at all-time highs, which is pretty telling. Now, more households are falling behind on their credit card payments. Okay, I've made videos about this in the past. Even Las Vegas is seeing serious declines in visitors and hotel bookings. But before I get into Vegas, take a look at this. So delinquency rates are rising. Again, not that crazy, but definitely up. This goes all the way back to 2012. And then also, if you look at the share of credit card accounts only making minimum payments, this has actually gone up like crazy. Because again, stimulus money, helicopter money, look at 2020 when they gave everyone stimulus checks, PPP loans, helicopter money, and then now look at the aftermath. This is like drinking too much, now you got to deal with the hangover. So if we continue, let me get back to Las Vegas. Las Vegas is seeing serious declines in visitors and hotel bookings. When people aren't going to Vegas to party, trust me, they're tightening their belts everywhere else too. This is a straight up luxury. So if you look at Las Vegas tourism, this is visitor volume going down. But again, you guys, down since when? December or January of 2022. So let's not be too alarmist here. And then also the total room nights occupied, pretty much the same since January of 2022, okay? If you want to see a serious decline, again, you just go back to 2020, look at April. Absolute rock bottom, okay? Let's also talk about our buddies across the pond. Fewer Europeans are also traveling to the U.S. You know what? You know what I call Europeans? Euro poors, okay? Yeah, you may have an amazing quality of life. You may sit at the cafe, watch soccer, drink wine, have no stress, no student loans, guaranteed health care, public transportation, all those things, but that's for losers, okay? You're poor. I'm American. I'm just kidding, you guys. I have a ton of family overseas. Shout out to my cousins across the pond. What's up? Let's talk about the Euro poors. So obviously, all joking aside, you can see a serious decline here starting since basically February of 2025. This is definitely going down. Foreign tourists in general are pretty much down across the board, except for these guys right here. What color is that? That is gray. What is gray? Middle East, baby. We're getting that Arab money, bruh. They don't care, dude. They got the oil money, bro. They go, buddy, I'm going to go shop in New York. I go to my cousin, and he goes to the BB. I'm going to go get the Louis Vuitton bag, pay no taxes. There we go, buddy. Hey, buddy, come to my liquor store, buddy. I give you best deal, buddy. And to prove my point, when it comes to retail sales on average, we're pretty much flat/up, okay? So I don't know if I trust Apollo Global Management, buddy. All joking aside, yes, there's obviously decline during COVID. It started to actually decline in 2021, going all the way down to 2023. But this chart is basically flat/up. So I don't know what these people are smoking. But here's another stat, decline of cash purchases of homes. So there's a huge trend of people moving from California, to Texas or whatever, Idaho Falls, those kinds of areas. Those people saw a huge influx of Californians. They would sell their house in California, get a big, nice big payday, and then go buy a house in cash. So what I'm seeing here, and that's just one example, people buy houses with cash all over the place, and you can come to East Cleveland and I'll sell you a house for $1. I'll give it to you for free. Actually, the city will give you a credit. Please take this house. We'll give you money. So here's something that'll blow your mind. U.S. companies generate over $1 trillion of revenue from China. That's trillion with a T. That's 6 times more than what the U.S. exports to China. So in other words, when a trade war heats up, it doesn't just hurt China, it smacks American corporations too hard. So if you think tariffs only punish the other guy, you're missing how globalized American business actually is today. Okay. So what are we going to do here? So the biggest concern, in my opinion, this is kind of where they hit the nail on the head, is tariffs aren't just about paying a few bucks more at Walmart. They ripple through the entire economy. They're shipping, jobs, business investments, tourism, real estate, the entire economy. So this isn't just your run-of-the-mill inflation or recession if we get one. Again, Longhorn's packed. Golf courses are packed. Everyone's partying. This is the wild 20s, dude. Roaring 20s, not wild. Well, they're kind of wild. So let's take a look at how they break it down. So trade war is a stagflation shock. So stagflation, S&P 500 down, rates up. Overheating, S&P 500 up, rates up. Recession, S&P 500 down, rates down. Goldilocks, baby, S&P 500 up, rates flat. Inflation, y-axis, GDP, x-axis. So what should you do as an investor? What was the point of this whole video? Stay liquid, baby. War chest, emergency fund. I know that sounds like some Dave Ramsey 1 + 1 = 2 advice, but I'm telling you guys, in this country, sleep cheap. Everyone wants the new toy. I want the new toy. I may make a video about a new toy that I'm potentially buying, flying out to San Francisco on Thursday to go look at it. Friday. But again, stay liquid, stay diversified. Keep an eye on how the policy moves are really affecting everyday businesses and households. Because again, from my ignorant consumer eye, everywhere is packed. Everyone's loving life. So if you found this breakdown insightful or helpful, please don't smash. Gently click the subscribe button. Gently click the like button. Gently share this video with 13,000 friends. And also share it with your grandmother. If she's still alive, give her a call, okay? If your grandpa's still alive, give her a call. They love you, okay? They haven't seen you in forever, unless they're the grandparents, the American grandparents that sign your birthday card with their first name. Love, Stan. Instead of like, love, Grandpa. And they put like a $5 bill in the envelope. Pathetic, embarrassing. So, again, thank you so much for watching. And as always, have a prosperous day. Oh, Marko eats steak at Longhorn. What a peasant. Listen to me. Bang for the buck. I've eaten steak everywhere, okay? I've eaten steak in corners of the world that you'll never visit, okay? I am better than you as a human being. No, all joking aside, eating steak everywhere. No joke. Whatever. Europe, South America, North America, all over the place. Bang for the buck. Outside of, sorry, that's not a fair comparison because steak is kind of expensive in the States. You can't do bang for the buck. United States bang for the buck. Outlaw ribeye, dude. You can't go wrong at Longhorn.